Hey there. What if I told you the next big tech revolution isn't just about AI, but about robots powered by AI? And guess who's at the center of it all? Let's dive in. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The investing Iguana is ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 768,000 reads and 53,000 likes. I've produced over 650 videos with more than 300,000 watch hours as of December 2024. Today, we're diving deep into Nvidia, a stock I personally own and have been following closely since its early AI developments. I've watched this company transform from a gaming chip maker to an AI powerhouse, and what's happening now is truly exciting. Nvidia's stock is soaring in 2024, and it's not just because of their AI chips anymore. Think of Nvidia like the HDB of technology. They've built the foundation that everyone needs to live in. Just like how HDB provides the essential housing infrastructure in Singapore, Nvidia provides the essential technology infrastructure for AI and now robots. You might wonder why I'm still bullish on Nvidia when the stock price has already gone up so much. Well, imagine if you could go back to 2010 and invest in the company that would power every smartphone in the world. That's the kind of opportunity we're looking at with Nvidia and robots. Let me break down Nvidia's strategy in a way that makes sense. Think of it like cooking at a hawker center. You need 3 things to run a successful stall: a great kitchen, equipment, amazing recipes, knowledge, and the ability to serve many customers quickly. Power. First, there's the Omniverse, their virtual testing ground. It's like the kitchen where chefs can practice and perfect their dishes before serving customers. Robot makers can test their designs in this virtual world, making mistakes and improvements without the cost of building physical robots. Just like how Singapore Airlines pilots train in simulators before flying real planes, robots learn in Omniverse before entering the real world. Second, we've got their new Blackwell chips, the most powerful AI processors ever made. These are like the premium cooking equipment that every top chef wants. If regular computer chips are like home kitchen stoves, Nvidia's chips are like industrial-grade woks that can handle anything you throw at them. Third, there's their AI foundation models. Think of these as the secret recipes passed down through generations. But instead of just one cuisine, these models understand everything from movement to speech to problem solving. It's like having a master chef who can cook Chinese, Indian, Malay, and Western food, all at the same level of excellence. Now let's talk about the market potential in terms we can all understand. The robotics market is expected to hit $38 billion by 2035. That's about the cost of building 10 new MRT stations. But some experts think it could grow to over $24 trillion by the 2030s. That's more than 30 times Singapore's entire GDP. Nvidia isn't just dreaming about this future. They're already making it happen. Their latest quarterly revenue hit $35 billion, up 94% from last year. To put that in perspective, that's like your CPF investments doubling in just 1 year. And they're generating free cash flow of $14.9 billion, more than twice what Singapore spends on defense annually. What makes Nvidia's approach so clever is how they're positioning themselves in the market. Instead of trying to build robots themselves, they're becoming the essential partner for everyone else building robots. It's like how NewWater provides clean water to all of Singapore's industries. Nvidia wants to provide the essential technology that every robot maker needs. Their upcoming Jetson Thor platform, launching in early 2025, is set to be a game changer. Think of it as the ERP system for robots, but instead of managing traffic, it manages all the complex calculations robots need to function in the real world. Let's talk about Nvidia's stock price in simple terms. Yes, it looks expensive at first glance, like a Sentosa Cove condo compared to an HDB flat. But here's why the price makes sense. Their forward PE ratio of 46.8x for January 2025 means you're paying $46.80 for every dollar of expected earnings. That might sound high until you realize they're expected to grow earnings by 127.9% in fiscal 2025. It's like paying more for a condo that's going to double in value next year. Suddenly, the price looks more reasonable. Their PEG ratio, which compares price to growth rate, is actually 34.1% lower than their industry peers. In simple terms, you're getting more growth for your money with Nvidia than with similar companies. Wall Street analysts are overwhelmingly positive about Nvidia. 37 say buy and only 3 say hold. None are saying sell. They're predicting the stock could go up another 17% from here. That's like getting an extra month and a half of CPF interest on your investment. I remain bullish on Nvidia for several key reasons. They've got $38.5 billion in cash. That's enough to build 3 Marina Bay Sands. Their partnership strategy spreads risk while maximizing returns, like how Singapore partners with multiple countries instead of relying on just one. And their valuation, while not cheap, makes sense given their incredible growth potential. Before we wrap up, here's something to think about. Every major technological revolution has created massive opportunities for investors who got in early. The internet created Amazon and Google, mobile created Apple and Samsung, and AI is creating new giants right now. Nvidia isn't just participating in this revolution, they're enabling it. If you found this analysis helpful, smash that like button and hit subscribe for more insights like this. Next week, we'll be diving into another exciting tech stock that's caught my attention. Also, drop a comment below with your thoughts on Nvidia's robotics play. I'd love to hear your perspective. Stay smart, stay invested, and I'll see you in the next video. Right now.